So now we are continuing to the second part. We are now going to the second part, the cash flow from investing activities. Okay, the investing activities are made up of the fixed assets. Okay, those are the investing activities. The purchase, the sale of the fixed, the changes in investments. All those make up the cash flow from the investing activities. So we're going to start by calculating the purchase of the fixed assets. Okay, because if you look at the information that is given at B, the fixed assets in 2019 were 1,201,500. In 2020 is 1,505,400. The amount increased, is it? So you can easily see that, okay, fine, there was a change. There were other assets that were purchased. That is the reason why we are now having a bigger amount. So let's find out exactly what happened. How do we do that calculation? I prefer to make use of the T account. The T account, you prepare a T account for the fixed assets. Okay, I'll make for you like a template so that you can always use it when you're calculating this. Okay, the opening, remember this is an asset account. Assets increase this side, they decrease this side. Anything that increases this account on the debit side, what decreases on the credit side? The opening balance here, the closing balance here. Okay, so we've got our balance BD, which is our amount from the previous year, 1,201,500, 1,201,500. You can also record your closing balance, the balance CD, which is 1,505,400, 1,505,400. Okay, so we've got those things already. So the next thing that we do now is to find out exactly what increases, what decreases. Asset disposal. If an asset is sold, the fixed assets will decrease. Because if you look at the information that is given on E, additional assets were purchased during the financial year, which are the ones we want to calculate. An old vehicle was sold at its book value, carrying value, or book value or carrying value 23,500 during the financial year. That's asset disposal. Asset disposal decreases our fixed assets. Okay, what else do we have? We've got depreciation. It also affects our fixed assets. What is the effect of depreciation on our fixed assets? It also decreases. So we're going to record our depreciation this side. Our depreciation also come this side. Definitely to mean that the additions, the extra asset which increases this fixed asset account will definitely appear on the debit side, because this account increases on the debit side. So I will indicate purchased. Purchase. The purchase fixed asset will find it on this side. Okay, fine. Asset disposal, we are given the amount is 23,500 disposed at carrying value. So we record the figure 23,500. Depreciation is also given in the extract from the income statement is 61,000. 61,000. Okay. So all the figures for the item that I've mentioned, they are already there. The only missing amount is for the asset that was purchased. So it's going to be the balancing figure. So we add the bigger side, we subtract the smaller side. So wherever the missing figure is, that is the smaller side. So the bigger side here is the credit side. We are going to add everything on the credit side and then subtract what is on the debit side. So we'll get 1,589,000, 1,589,900, 1,589,900. Okay, in the total columns. And then now we subtract the 1,201,500. We are going to remain with the amount 388,400. 388,400. This is the amount that we're looking for the purchase of fixed assets. Okay, so we're going to record it 388,400 in brackets. It's an outflow. We purchased, is it? Okay, there's also a sale of fixed assets. We go back to E again. And as an old vehicle was sold at its book value, we sold at the book value at 23,500. So this is the money that we received from the sale of the fixed asset, the 23,500. 23,500. It is an inflow. Money is coming in. Okay, let's look at the fixed deposit. We have got a fixed deposit, our financial asset. Where is written financial assets? In 2019, it's 185. In 2020, it's 195. Okay, so we are having 185,000 And then we are saying now it's 195,000. What does this mean? It means that our fixed deposit increased, is it? The reason why I recorded it like this, it is because an increase in investment, it means it's going to bring about an outflow. Money has been taken from the business account and then placed on an investment. So it is going to give us a negative amount. The difference between these two amounts, 185 minus 195, we're going to get 10,000. Okay, we're going to make it a negative amount. Why? Because we are saying money has been taken from the business bank account to increase the investment. So that is an outflow of cash from the business books, okay, or from the business account. Okay, that is the 10,000. Okay, on cash flow from investing activities, these are the only items that I can see. There is nothing else. So now what we can do, we can find out how much is the total. The negative, we can add the negatives and then subtract the positive. It's the easiest way. You'll be able to get something like 374,900. 374,900 in brackets. That is our cash flow from investing activities. Thank you. Don't forget to like this video. Please also do subscribe. And don't forget, even if you've got a comment or a question, just leave your comment on the comment section. I will respond to you. Thank you.